All right. Okay. Well, just for the record, just give us your kind of your name. Just tell me your name. It might need to be edited in. So your name and how you're
Okay,
consultant or something, you know.
that's right. So my name's Nick French. I've long been retired from the front end of cobalt, the cobalt industry, but I have kept a finger in the pie in form of being an advisor and a consultant to a couple of groups since I stepped back. So if it's a fascination for a lifetime, it remains a fascination now, even though I'm not directly involved.
And if you were a new investor looking to get involved in the cobalt market, what just tell us a little bit about cobalt itself and just a general kind of, sort of general knowledge question about what actually cobalt is and the market.
Okay. Cobalt, the first thing to say that's important about it, cobalt is almost without exception not mined for its own right. It is a byproduct that is produced when you're digging up nickel or when you're digging up copper. And so one of its key characteristics over the 30, 40 years I've been involved has been price volatility, because the supply of cobalt is not able to be adjusted to the demand. It happens to be what comes out as a small percentage of the nickel and the copper that's dug up. And so the combination of that being a byproduct and the fact that a very large part of it is produced in an exotic part of the world, i.e. Central Africa, and a large part of its refining is produced in a slightly opaque territory of China, where pretty much 85% now of certainly the battery making capacity is located, means that for the both for investors and analysts, it's a very difficult item to have clear sight on, and has a rather exotic, if you want, daring do element about it.
And the kind of the demand factors for this market?
It's growing immensely, and one of the features that makes it more difficult to predict price for the future is that both demand and supply are growing almost geometrically. So again, if we go back those 40 years when I first got in the business, the vast part of cobalt production was in the form of metal. There were very few chemical compounds produced with cobalt, and the total market was about 20,000 tons a year. Currently, it's round figure either side of 200,000 a year. Of that 200,000, only about 30 odd thousand is in the form of metal, pure metal, and the balance is in chemicals that comes out of the ground, essentially produced as hydroxide, and goes for the most part into the battery field, and is anticipate that it will continue to grow both in demand and supply in the years to come. So when we get round to talking about price, the issue is going to be not which is going up and which is going down, but which is going up faster.
And that tension that you talked about between the metal and now kind of the EVs, tell us about that, because that's kind of all over the place at the minute.
As I said, just above 30,000 tons a year of metal is produced, and getting on for a balance, call it 160, 170,000 tons that starts its life as hydroxide. So if we look at the metal side, the industries that require metal specifically and can't use hydroxide are essentially what we classify as the superalloy users. They are making jet engine blades for commercial airliners, for military airliners, for military planes, I should say, for surgical implants, new hips, new knees, etc., for land-based gas turbines for producing power from wind rather than the demon fossil fuels. All of those, for various reasons, are extremely healthy. Commercial airlines obviously stopped dead during COVID. They're now playing catch up. Military planes, obviously, for all the wrong reasons, are being focused. And again, now we've got problems in Ukraine. We've got problems in the Middle East. We should come on to China and the potential for ugly moments concerning Taiwan. So that's all booming. Again, surgical implants stopped dead during COVID for obvious reasons. Now, everybody who is in my generation is thinking about their aching hips and their aching knees, and again, playing catch up. And again, with the understandable concern one has for climate change and the damage done by fossil fuels, turbine blades are becoming a priority in many areas. Again, cobalt is included in that. So there is a booming demand, as any trader in the street will tell you, and they've just come back from what they call the mating season conferences of long-term contracts. And I'm told these have been, I don't know, hot in terms of long-term contracts for that superalloy sector that I've just described. Staying with metal, on the other side, the producers of it, people like Vale, people like Xstrata, or used to be called Falconbridge, and Sumitomo, the Japanese, for various reasons, are all down in production. Vale, for example, has just started underground mining as opposed to open pit mining for its source, and that's slowed down the rate of production. There have been technical problems at Sumitomo. So those productions are down. What was available, and most of that industry, by the way, the consumption side of it, a large part of it, if not in Europe, is in the USA. The USA, for the geopolitical reasons, we ought to talk about geopolitics a little bit in a moment, have effectively banned Chinese cobalt metal coming into the States with a high tariff. So what was available to America is not. So therefore, there's a suction down from the European market of the Vale that would have gone to Europe, the Falconbridge would have gone to Europe, the Sumitomo would have gone to Europe, was being sucked back into the States. Russia produces, or has the capacity to produce, large amounts of alloy grade, superalloy grade cathodes. And again, because of the various restrictions and sanctions surrounding the war, that is not available in North America. So all of that puts an upward pressure on the metal. That's the metal side. On the hydroxide side, obviously there's a lead lag between production plans and demand. So the demand, as you remember, before we went into COVID, every business newspaper we picked up talked about EVs, new battery requirements, new giga plants being built. And the subsequent result of that was the commitment to CapEx, to opening up new mines, a lot of them financed and run by the Chinese, and a lot of them in Congo, in Africa. But they take 2 or 3 years to come into production. Those are now coming into production. So, for example, one of the large producers is Chinese, China Moly it's called, Tenke Fungurume in Congo. They've all increased their capacity. They've put it, I can't pronounce it correctly, is it Kisanfu, I think, in Congo. They've put on another 20 or 30,000 tons, and that's now all coming out of the ground, just at a time when, for economic reasons, we can look back at why sales of EVs in China have actually slowed down for the time being. Now, we'll all catch up. It's a bit, if you imagine towing a car with a tow rope and the towing car slows down a bit, the car that's being towed suddenly catches up and the tow rope goes tight, goes loose, I beg your pardon. And that's the state that hydroxide, the tow rope's gone loose. Now, eventually, my belief is that electric vehicles still in healthy shape, still growing, sales are still growing globally, will pull away again, and that tow rope will come tight and the hydroxide will tighten up. But there is a disconnect, if you want, or even a tension between the two going in different directions in the short term. We should mention, and that's obviously been implicit in everything I've been discussing, the geopolitics of it all. Cobalt happens to be a pawn on the chessboard, but there are a lot of shifting sands going on. And one of the main themes that we'll read about in our newspapers is this whole US, I'm going to call it USA rather than the West, but obviously the West, in many cases, fall in line behind the States and China. To cut a long story short, China managed to get ahead of the rest of us, build up a battery production capacity, get into Africa, get its claws into the raw material flow. As we know, they've promised many, not promised, they've gone ahead and given many countries in Africa financial aid, supposed to build roads and railways and hospitals and infrastructure in return for advantageous positions in raw material supply. With all that in hand, China got way ahead of the West in electric vehicle production, in battery production. And for the last couple of years, the West has seen its vulnerability in this quarter and has desperately been trying to play catch up. So if you just take one example, there's a mine and a production capacity in Congo called Chemaf. They have been supported to a great degree over the last few years by Trafigura, who is, are a large mining and finance company, who, cutting a long story very short, have decided it isn't for them. So the ChemF production capacity in Congo is now effectively up for sale. The USA and the EU are desperate that this capacity should not fall into Chinese hands. So there is, and I'm not a party to the details of it, but I'm sure behind the scenes, there are a lot of Americans, whether they be industrialists, bluntly, whether they be CIA, in the Congo at the moment, trying to figure out how they can not lose this prize asset, again, another prize asset, to China. And the Chinese, I'm sure, equally, helped by all those lack of handicaps that we in the West set ourselves to jump over in this area, are working out how they can grab it all. So I think this is just one small corner of the chessboard. There's some tension going on there right now over that particular project. And for example, Chinese stockpile, it's called the SRB, the Chinese government stockpile, has had regular purchasing programs for cobalt metal for the last few years. They bought, and remember I mentioned metal is only 30-odd thousand tons. They bought 5,000 tons of it no more than a year ago. And I think a week or two ago, it's just either they've announced or it's leaked out. I'm not sure it's official or not official, but it seems to be fact that they are aiming to buy another 3,000 plus tons over the next few months.
Technological changes, particularly in the kind of the battery metals. Now, I don't kind of expect you to be like, I don't think many people will be fair with all of the technological research going on, but there are some major trends, and sort of also pulling on your experience on how long these things can take to come into the system. So I'm wondering, what does technological change mean for the cobalt market? I suspect we're particularly talking about battery metals here.
We are talking about batteries, and obviously that's been a pivotal point ever since the lithium, cobalt, manganese battery was the primary part, and the technology was the main runner. Now you have liquid iron phosphate, and you've got other alternatives as well. And we've always got an eye on that. I think what's telling, and this is now a year or so ago, is Tesla, by way of example, major user, of course, of these batteries, and now have their own gigafactories in partnership with some of the Japanese partners around the world, and particularly in the States, were aware of the vulnerability at that time to cobalt, and of course to nickel. I can't speak for nickel. I'm sure one of your previous correspondents, Martin Vidra, had something to say on that. He is an expert. But Tesla, public knowledge, talk to any metal trader and they'll know that Tesla were sniffing around looking for nickel, high-grade first-class nickel, and were sniffing around looking for cobalt. And then decided that since they couldn't get the right answers on cobalt, they would go into an alternative strategy, which was Mr. Musk standing up saying, we're not going to need cobalt anymore. We've got these secret projects going for alternative non-cobalt containing battery raw materials and technologies, and we won't need cobalt. But I think it's one of these things that watch what people do, not what people say, because within months of Musk making a high-profile strategy of making those announcements, it came out that Tesla, had bought a long-term, I think it was a 5-year contract from Glencore for large amounts of cobalt per year, which along the lines of see what people do, not what people say, was a pretty telling indicator of probably what the inside thinking was at Tesla. And it wasn't, cobalt's no longer going to be required.
One argument I've heard on this is, yes, the technology is going to come in, but it will take time. But at the same time, you've got these projections for electric vehicles, just to keep rising. So there's sort of the balance of, okay, so demand may be falling just for individual batteries, but for batteries as a whole, for the number of batteries, it's going to keep going up.
Even if cobalt per battery is reduced, per battery, let's say in a standard car, is reduced, that doesn't mean that we're going to need less cobalt, because of course, if cobalt per battery is reduced by 50%, but you're producing 4 times as many batteries, you still need overall net 2 times as much cobalt. And that's the general pattern. So unless the whole trend for electric vehicles reverses, which despite its challenges on mileage that you can get out of a battery, where to recharge them, etc., which are still concrete limitations and the items that make individuals like you and I hesitate as to whether we go to electric vehicles or not. The overall number of vehicles will increase. But remember that China is a very large part of the global sale of electric vehicles, and we all know what's happening there. And so I think the amount of cobalt required for batteries will continue to increase.
So obviously we've been talking about Congo, and huge amounts, 80% come from that. But then we've got this stuff going on in Indonesia, and my understanding.
Yes, you're right. You put your finger on it. Indonesia is the new frontier, and it's really opened up since I stopped being involved directly in it. But if you look at the stats, and there was a conference last week in China, in Shanghai, the annual Antaiki conference, which is the big nickel cobalt conference, and they forecast some figures going through over the next couple of years. I've got them here somewhere, but they talk about today China accounts for, I think, about 76% of refined cobalt. But if you go back to the raw cobalt coming out of Congo, Congo is currently about 70 or 80%, and Indonesia about 15%. But in 2 or 3 years' time, Indonesia, they think it's going to be 25 or 30%. So it's a major area to watch. Congo's been the raw material source, China's been the refining product, certainly on the battery side, and they hold all the cards. Having any other party, in this case Indonesia, that is going to be a significant supplier of raw material, has to improve global supply stability and take away from the risks that come with one source dependence.
If you're interested in what you've just been talking about,
yes,
I mean, how do you get? What are the ways to get exposure to?
Right. It is very opaque still, very difficult to get into, and it does not give us the perfect opportunity like buying BP shares if you're interested in oil, or Tesla shares if you're interested in the automobile industry. There are a number of ways in, none of which are perfect. You can buy shares in a large mining company such as Glencore, who produce, round figure, 50,000 tons of the 200,000 tons of cobalt produced per annum. But of course, there you have the question of dilution, because they have many other activities in coal, in iron ore, in oil, in other metals. And so even if cobalt prices quadruple, it doesn't mean Glencore share prices do if the coal price goes down or the oil price goes down. You can invest in some new projects who haven't yet put a spade in the ground, but are promising all sorts of things for the future. There are a number of those. I won't go through them at the moment, but they're all online. You can look them up. And they are really a double or quits option. And it has to be said, in the last couple of years, a couple of them, which a number of our listeners maybe will know who I'm speaking about, have been mostly quit rather than double. In 2013, I think it was, 2010, 2013, the LME, the London Metal Exchange, opened a contract on cobalt, which tried to give investors exactly that. But it has been, for a number of reasons which we can go into, relatively illiquid, and is now, subject to your opinion on that, mostly redundant. Most recently, one of the markets in the USA, the CME it's referred to, has become an active financial instrument on the cobalt price. It's a financial settlement, so you don't have to worry about things like warehouse insurance and drums and packing and certificates of analysis. It's totally a price against another price and a financial settlement. But it's priced out at the end of the day against what used to be the Metal Bulletin, now called the Fast Markets price. But again, it's mostly for large corporations, some of the big end users, whether it be BMW, Tesla themselves, Apple, do, I believe, hedge large numbers on it, as do some of the producers, people like Glencore et al. Again, not really suited to the small user, because the small independent retail user, you and me in the street, have to satisfy a number of financial credit points, which are probably beyond the value of your and my house. And secondly, have to answer a number of KYC, know your customer regulations, because of course, this market, which it wasn't 20, 30 years ago, is now regulated, particularly when it's a financial instrument, and any wrongdoings or liabilities are carefully avoided. So that's quite difficult for the small investor. There are a number of smaller traders in London, for example, but also in New York, who might consider you if you approach them, if you can meet the KYC, if you can meet the financial requirements, who will sell you and hold for you small quantities of cobalt. There will be margin requirements. There will be quite, I think, hefty buy-sell ranges between the buyer price and the seller price. So that may be quite useful if there is a major movement going on, if the price is going to go up from $10 to $50 and you don't mind paying 5 of those to your broker in the middle. But if, again, we will talk about price outlook in the immediate future, if it's going to be moving within a very narrow range, then those buy-sell ranges on the trading in and out will nullify any benefits that you might have. So I think I've given you a lot of non-answers rather than the easy answer how to come into it.
So I suppose final thoughts is that basically, you know, cobalt's been written off before, but don't write it off again, kind of thing. Is that where we're
yes,
at?
It will continue to be an important element. I'm afraid it's not one, as we said before earlier on, that makes itself immediately available to investors as an investment or a speculation, or call it what you want. But as an industrial raw material, will continue to be significant. And I think will more and more be considered. If you look, again, we began this discussion by talking about where we were 40 years ago, roughly where we are today. What are the ingredients within that? It's become a lot more, if you want, a respectable metal for mining companies to consider as part of the revenue flow. You know, it's now run by big companies, mining companies, whereas before it was a lot of individual opportunists. I think I remember in the early days saying to a company that's producing copper, well, you know, what's your total revenue, you know, what's your profitability on your cobalt? And they said, well, cobalt, we don't look at the profit of it. We just, whatever the revenue is from the cobalt, we just reduce it from the cost of our copper production. But I think it's notable now that in the accounting departments and the revenue departments of these large mining companies, they have a separate stream where they identify, of course, their copper or their nickel revenue, and a separate stream for looking at the cobalt costs and the cobalt revenue. So it's become a grown-up member of the family rather than just one of the little kids around the corner.